This is our Forex blog for May 30th, 2012, and if you watch any of our latest blogs for the last week, you've seen the new feature which allows you to use our currency meter and sort it from strongest to weakest, or weakest to strongest. This is just a simple quote sheet with the individual currencies on it, and you can sort it by any column you want. The yen is going up against 100% of other currencies, the dollar 85%, CAD 71%. The pound, Australia, and New Zealand are the weakest right now. And by sorting it, you automatically are looking at the strongest ones on top. And the longer and the more time frames trends up, as this case is the yen, is strong on all time frames. The strongest by far, dark green, is a lot stronger than light green in the dollar. That's the strongest one. The weakest one's in New Zealand, then the Australian, the pound, then the euro. Now, the more time frames that are down, like in the case of the euro had a little bit of strength here, and then it kind of subsided. It's very safe to assume, and most of the time when the strength, it has a lot of strength, it's a counter trend move. Once that strength disappears, if the daily, weekly, monthly trend's down, you see some extreme weakness come back in, that's a trend that's likely to continue. So let's start with the euro. We want to sell it versus the yen, strongest. And we also have a new feature called Forex Signals. And this is what people want. They want to know when to buy and sell. Our currency meter shows them which currencies to focus on buying and selling. And the new tool is called FX Trade Signals, which you can find under Add Script. We go down to FX Trade Signals. And right now there's no configurable options. But this looks at a lot of different things, where this currency is in relation to its daily, weekly, and monthly pivots. The daily, weekly, and monthly trend in this case is down, so we really look for really extreme moves before we do any counter trend levels. And the triangles are trend trades, the circles are counter trend trades. Because this is so weak on the daily, weekly, monthly trend, there's certain patterns that tend to be pretty high probability, like this one and this one. This one, if you're gone short, you would have probably lost 6 or 7 pips, and you made money on this one, you made money, you made money, you made a lot of money on that trade. Notice you sell it when it goes 1 pip underneath the low at 80. Trailing stop got you out of that one here at 69. You only actually made about 18 pips. And it's up to you whether some of the pullbacks aren't steep enough to put signals on the chart. So, these are just suggestions for trades, and when the counter trend signals come up, you might want to exit half your trade or really consider getting out of a lot of it. This trade right here, you can see, generated a profitable trade, and then one of the most profitable one was right here at 40, and it got you out down here at 02. Notice the counter trend buy signal, a few bars, and another one right here. A few bars later, you got stopped out. So the counter trend signals don't have to be used you don't have to buy the counter trend signals when it's one of the weakest currencies like this. But clearly, they're very useful to be used, as exits of your trend trades. Now, the dollar was moderately strong today, not as strong as the yen, but you could be looking for trades to the downside on this. Now, these signals show up based on certain range bar patterns, but this is really what I want to focus on here. You ideally want to wait for a pullback that's near support or resistance. In this case, the hourly moving average is a great place. In this particular case, there's a lot of strength right here, so I would have probably passed on that one. The second one, where it came up here, double topped, had far less strength than before. It's at resistance. It wasn't able to go above the previous swing high. This is a very high probability trade here at 24.60, and you can see our trailing stop got you out down here at 18. Here is the first counter trend buy signal. It's not at or underneath the lower containment bands, at least the 1.5, so I would have kind of paused on that one. But when I saw this right here, what I typically do is when I see a counter trend signal, I will exit half my trade when it goes a pip above that bar's high, and it's kind of going sideways right here. The weakness is it's not extreme, and it's falling off, so I would exit the other half right here too, around 24.15. I would have been short this at 61. This is a beautiful 10, 20, 30, 40 plus pip trade. And then the last one, you get a nice pullback right here. This is a 5-bar pullback, 5+ bar pullback, and you can see it went up without that much strength. Anytime you see a counter trend move with half or less strength compared to the previous peak weakness, that's a great trade. And you also always want to draw your fibs off the last move, because the fib targets are the best exits. And as we scroll forward here, it went right to the fib targets underneath the lower band. I would have been out of this trade at 23.90 or maybe 92, short at 25. So it's nice 25 pip plus profit. And you can see it never really went farther than that. So by using the currency meter to identify the currency, the signals to identify possible entries and exits, so the ones that are far away from support areas. So this is a Fibonacci profit target level that I did last night. I spent 30 or 40 minutes, so you don't have to each night. And you see these fib areas on your charts, especially when they're underneath our white 2.0 containment bands. They're very likely to be, when they're at or underneath the white bands, they're very likely to be the maximum low of the day. So the farther away from the next support area, in other words, this trade right here, if you, and some of our traders are, telling us, we've only released this last Friday. It's one of the most loved features in the software. But some of our traders are waiting for a signal, then waiting for the trailing stop to get hit, and then waiting for the other trailing stop to get out. 48 here. And at 58, made 10 pips. This one gives a signal here. They wait for the trailing stop to get hit at 52. They're out right here at 19. Now, it doesn't get them in sometimes as soon as just waiting for the signal, and what I do is wait for it to go 1 or 2 pips underneath the low. If I get a signal and there's a bunch of bars just going sideways, I wait for the lows of the little range to get hit like this. If I were to get a signal right here, I'd wait for this bar's low to get broken. So I'd be short right here at 35 versus maybe 40. That's the only thing that I do that I haven't really explained too much in class. But when you get a nice pullback like this, and it already went down to the low, the previous swing low is always a likely profit target at 08. If you shorted this at 24, you have a good chance to make 16 pips. And you put your stop a pip or two above the high here at 32. This is a 6 pips per bar chart, so you're risking 6 pips plus 1 pip plus maybe 2 pips spread. And your loss, if you're wrong, is under 10 pips. And when your likely profit target's 16 pips, in this case it went further down, that's the key to trading. Small losses, big wins. The pound also was a bit tricky earlier in the day with conflicting trend signals, but earlier in the day it was extremely weak on all time frames except the monthly. The monthly takes sometimes a week to 2 weeks to change trend direction. So if the pound is now undergoing a downtrend, it might be another day or two before the monthly trend shifts down. So you can kind of ignore that. But I leave it on my charts because I will trade more lots when all the time frames are up, like you see in the dollar and the yen today. It makes me feel more comfortable. I'm more apt to take trades that aren't perfect but have a good risk versus reward ratio. The pound was weak earlier today. The yen and the dollar were strong. Let's take a look at this. Earlier in the day, a nice sell signal right here that generated profit. This one right here, it did go down a little bit. You might have got stopped out in your break even. There wasn't another there wasn't another sell signal. But anytime you get a nice little range rectangle pattern like this, it's usually a high probability. This is extremely weak on all time frames, so you go short again, and the second trade worked. And the counter trend signals, again, when you see a currency that's probably one of the weakest 2 or 3 currencies out there, you don't want to be buying these, but you do want to be aware of where the counter trend signals are so you can get out of that trade. Notice these signals show up when the bar closes. So this buy signal right here would have shown up right here at the end of that bar, the beginning of a new bar. So once that happens, you might want to exit your trade. You have a very huge, 40 pip profit down there. And notice a nice little pullback here. It's gone up. You always want to draw your fibs on the chart too, especially after it has a nice big move down. If you can find a signal near the 38 to 50% retracement on one of these super weak ones, it's pretty high probability. And you're not always going to make 30, 40, 50 pips, but even if you get 5 pips on one, 10 pips on another, those can add up. Remember, 10 pips per day, 50 a week, 200 a month. In 2 months, you double your account. That's with just 10 pips a day. So getting 5 pips on one trade, 10 pips on another, 30 pips on another, you got a whole week's worth of profit using these signals in most of these currencies. The the New Zealand was the weakest over the last couple hours, and the yen was strongest. Let's bring the New Zealand yen up And you can see, when you're near the lower containment bands, it's not that good of a trade. Once you get a nice little pull back up, this trade right here worked, this one here worked. There unfortunately wasn't a signal on this one. However, this is a pattern that I found very profitable. 2 bars up, 1 bar down, 2 bars up, 1 bar close. It's going to be in a future release of this, so there would be a sell signal right here. But you have a sell signal right here. This one you would enter right here when it goes underneath that bar's low by 1 pip. You're in at 92. Notice the counter trend buy signal right here. End of the move. I've made trading about as easy as I possibly can make it, even for brand new traders. You use a currency meter to focus on buying the strongest currencies, selling the weakest ones. You then wait for the signals to get in, the signals that are farthest away from the next support area, in this case the previous swing low. If you shorted right here, you have a good chance of making 10, 15 pips. This trade's good. And anytime you see a lot of weakness on the way down, followed by a pullback move up with 1/2 or less the momentum, and you get a sell signal, it's very high probability. This one found a low, rallied up, came down, came down. That's possibly a reversal signal, but on the way back up, it didn't even come back up to the previous highs. And, that's a very good sign of a reversal. Now, there's quite a bit of real-time strength, but the longer time frame trends are all down, and this one goes down. And another one of the signals that I showed earlier is 2 bars up, 1 bar down, 2 bars up, 1 bar down. When that's the case and the daily, weekly, monthly trends all down like this, it's a very high probability signal that will show up in future versions. But this one right here, excellent trade. You always want to draw your fibs off the previous swing to get an idea of where your profit target is. And notice it came down to that fib target, just a pip away from the 1.618 fib target, end of the move. So you can use the fib targets, the counter trend signals to get out, or the trailing stops. And in this case, it's also a trading zone area, very likely maximum low of the day. As you can see, they show up there. In these trading zones, as the price goes down, they start to show up later in the day. If the market rallied up, 60-20 area would be major, major resistance and a great place to look for sells later.